Selamat pagi. Good morning. It is I, Kenny Tan, with lots of growth, back here for another session of Me versus Me. Our last Wednesday for October as we close out our second month of this challenge and this commitment to consistency. Now, a few words before we start. Today is gonna be outset. I'm already feeling like I'm not gonna trade today. Partly because of what I did in the market yesterday. Good news, don't worry. We'll go into that later. But also partly because I'm not properly balanced. Why is that? I'll share with you as we go into our session. So quick disclaimer, this is none of this video is financial advice. I'm just doing this merely for documentation purposes. There are many better traders out there. I'm just doing it because I want to see what I look like 5 years down the line, 2 years down the line, 3 years down the line. Even my kids can watch. So quick disclaimer, past performance does not guarantee future results. And that's why I have my processes. The mindset itself is the first part. Preparation. Preparation. All right. Even that was off. How many of you spotted that in the chat, huh? Mistakes happen. We are only human. So emotionally and stress-wise, I'm not stressed up. May sound like I am. I'm not stressed up. But I'm emotionally on a bit of a, what would you call it? Feeling a bit floaty. And why is that? It's because we hit a very good winner yesterday, and that was down to a good analysis coming from Monday going into Tuesday. I'll share more on that in the next section. So edge-wise, we got really well affirmed yesterday. So I'm okay to continue today. I know that I can continue to read the market, and whether the market is going in or out, up or down, I can catch it. But the next one, I'm not quite ticked off. It's balance and patient. I am slightly imbalanced. I already started noticing it yesterday's session, and today I feel that a little bit more. Add on to the fact that I had maybe slightly worse sleep. I might say it might be a 6.5 instead of my usual 7s or 8s. So that makes me slightly off balance today. Outcome wise, I'm okay to take a loss today, but I'm not okay when I did not arrive at the right process for the right execution. And that's really it. The CG anticipation is really understanding my workflow, understanding my preparation flow, and currently my preparation is not at the tip top. Distractions wise, we're good, you know, like nothing's happening here. But let's head on to a little bit of forecasting so that I can show you where the A+ plans are or are not. And we'll run a bit of Kenny's special process in the market. All right. So let's go to here. And let's go to recap. Yeah, I was fiddling around with this, and we're gonna add a scene. Ta-da. Okay, that's way too big. That's okay. And we're in. So, as we can all see, zoomed out, since last Monday, the price has been coming down, coming down, coming down, coming down. And on Monday, we took a trade in our ranging accounts, and that was fulfilled down to the bottom, and which was the opening price of 2 weeks ago. Then yesterday, I did say that we were going to take a trade, and we actually executed on live stream yesterday. And here's how the trade turned out. We only needed 5,000 pips, 500 pips, and usually I take it at 80%, 0.8R, 0.8, I secure most of my profits, depending on the market situation. This one I should have been riding all the way down, but in any case, a profit is a profit. And I did have the remainder of my lot finish down to 80% of the yellow line, 80-90% of the yellow line, which is in fact the open of the first week of October proper. So the price is in this sort of decision point right now as we flip into our forecast. And what is it really doing? Well, you can see that Asia itself is still forming the body. It could form a very small body. It could flip into a white body. At this point in time, it's still a black body. The analysis for me really is the price has formed a low. Currently, we're gonna be trading well within this Tuesday. It could go up, it could go down, it could go up first, then down, or down first, then up. So we're right in the middle of the park right here, which is not quite the place I want to be for a trade. I need to be very, very sure of the position of my positioning. And in any case, I much prefer a sell over a buy. Why? Because our formation is still on a seller, and we're still well below 27 October's low, which is Monday. So because of these two facts, I'm tempted for a seller. However, because of my slight imbalance and because of the positioning of the market right now, we're looking for 530 pips, which is 5,300 points. So it fits right here. We're right in the middle of the park. And in fact, the higher it goes up, as long as it's a black candle, it should still be a good sell. And we've got the 27 to cover, and we can always exit should the price flip. But one thing to note is the MA is now captured by the Asia body. So that is another point of risk. So you can see how confident or not confident I am in my own verbalization of this trade today, which is hence why I am taking a break today. I'm okay for this to be a skip trade. I need a break anyway. We'll come back tomorrow for a better shot at this market. But as it is, I'm a seller. I'm still a seller for this market until the price goes back into that Monday and flips up the other way. Otherwise, we should still see all the sells fulfilled downwards. And that's enough of me rambling about sell. Before we really go away from the forecast, let's have a look. Take a stock check on where we are. This is H4. And what I marked out here is actually the open of the month. So when the price hits back here, this month is going to be a bodiless month. So as it is, depending on so this is the monthly, right? Let's go from the top down, right? It's closing off. It's very unorthodox to do this reverse, right? We start from the low and end up on the high. So just to remind ourselves where we are in terms of forecast, because I'm not trading anymore, I want to see where this is going. This body can stay white or it can go into a no body because we have 3 more days of trading, including today. So Wednesday, Thursday, and Friday. On the weekly, we've got a spread of candles, and whether this candle will end this week here or whether it goes back within the 2 candles before, we'll find out. But currently we're operating within that week, which is why on the daily, even though we're inclined to say that the price may hit the red line, it may not do it this month. It may need to go back to the MA here because it's contained by this range here on the left. There's a black candle here, so there's a support here, there's a resistance here. The price may tend to trade back into that range. which is why, having seen that this low form, and this coincides with all this range here on the left as well. The low of this week, the high of the week previous. So we're well inside this week. That could be a retracement up. Could be. So that could happen today. That could happen later today. I would rather the market shake it out. And that just added 2 more minutes to our pre-market. All right, so let's head into our closing intentions. Okay. So with our known intentions today of not trading the market, we are going to choose our other button, which is to hold our risk. We're going to save our risk. We're going to do all our other actions, our journaling, our backtesting, our refinements. We're going to do that. We're going to enjoy our day off. But we're going to come back at the end of the day to do our closing of our routine. And we're going to also take note of what the market did today. And had we trade, would it have been a profit or an expense? And with that, I'm going to close out today early because we're not trading. It's good news. Have a break, everybody. So I'm not sure how you guys take your trades, but leave a comment down below on what is a perfect trading day for you and what is a perfect break day for you.